So, welcome to Money Man. A lot of people have come to me asking me to comment on how the markets were in the last week, in the last fortnight, or the last month. Uh, while I do share a lot of information on the markets, it tends to be more disorganized, or if I may use another word, uh, as and when things happen, I just keep sharing, and there is no schedule in terms of having a regular review of the markets. So I just thought, why not start this and see where it goes? So I call this a state of the markets, where we try to take a peek under the hood of the market. And this I'm doing for September 2025, just for the month of September 2025. I want to start it as a monthly initiative and see where it goes. So let's start. Just a bit about Money Man. This is our statutory disclaimer. You can read the same in detail on our website www.moneyman-research.com. Mentioned over here. You can just go over there and read this. So let's start. So you all know what my market map really is. I finished this over a long period of time, and it throws pretty accurate, wildly accurate signals. And this just helps me to make sense of where the market is. I'm not going to go deeper into which value stands for what, because a lot of them are custom made metrics. What this does show is how the entire market map looked like for the last entire 1 month, starting from 1st September till 30th. If you see, we started the month in a pretty kind of negative manner. Reds indicate negative, greens indicate positive, yellow is kind of like a no man's land. If you see any dark greens, that means that the markets are about to reverse towards the upside. And if you see any dark reds, it means the markets are going to reverse downside. This is precisely what happened sometime in the middle of the month. One of my low frequency but very high probability metrics started flashing, and for 4 days in a row. And while things were just building up, a lot of greens were building up, this happened and the markets really started crashing. And see how things have changed, and we see a buildup of more reds. Right now the market is extremely negative. So it is also closing the month on a very negative note. This is a heat map for the Nifty 500 index, and for the entire month, of course, and it just shows how the entire market has been. Now, the best part is that we see a lot of greens also. Of course, there are a lot of reds, but there are a lot of greens also. So there have been quite a few wild swings, and while the markets may have ended decently, but on a negative note, we still saw a lot of sectors taking the beating. All of these are classified as per sector, and see how they've taken a beating. So a few sectors have gone up and a lot of sectors have taken a huge beating in this particular month. So this is, I plotted the monthly returns for Nifty 500 over the last 25 years from the year 2000. Why Nifty 500 and why not Nifty 50? Because obviously Nifty 50 just is not enough to be a complete representative of the entire markets. I feel that Nifty 500 is a better representation of the overall markets, because it contains all different kinds of stocks, and it gives us an idea on how things are. And this is how 2025 has progressed till now. Now the point is, September ended with around a 1.21% positive, in spite of the last almost a week or so being very negative. September, has always been a very volatile month, has always been a very tough month. Remember last year in 2024, the entire correction started from September onwards. Till August, things were okay. So down below, I'm also showing what are the average returns for that month over the last 25 years. What is the win percentage? That is, how many times has that particular month closed positive, and what is the volatility? And of course, everything is color coded. Red means worse, blue means better, much better. Anyway, this is what has happened till now. Now we are entering into October, and more specifically October, November, December. Historically, if you look at these 3 months, they have been some of the most positive months. You can see from here that they have given great returns. In fact, November and December are probably the two best months, and the win percentage is amongst the highest for all these 3 months. You would also notice a lot more positives in November and December. What it also shows is that October starts with a higher volatility than September. And it is probably the third most volatile month, or has been in the last 25 years. But the good news is that the volatility usually is on the upside. Now see, volatility can be on both sides, downside or upside, but it seems like we are entering into a phase where the volatility will be on the upside, and these 3 months should be generally a positive month on an overall basis for the markets. Let's go a little bit deeper into indices. I'll cover few key areas, key points that I track usually. First is of course index returns, and for the month and for the current calendar year. While all of them have given positive returns, you can see that for the year, the small caps have really taken a beating, and they are down almost 6.5% from January 2025. Nifty has still been up pretty decently, but like I said, Nifty is a very, very small part of the market. All the others show the true picture on what is really happening. Look at how the breadth component is as far as the indices are concerned. Now I usually measure this based on 3 parameters. What percentage of stocks are above the 4-week moving average, above the 10-week moving average, and above the 30-week moving average. These give a clear picture on the short, medium, and long-term trends. Right now, all the indices are really taking a beating because there are more number of stocks below the moving averages than higher up. This basically means that there is no upsides happening in the market, which also can be experienced. Look at the strength of the indices now. I use a technical metric called RSI, which is called the Relative Strength Index, because this shows the magnitude and force of price movements and helps us gauge what is the momentum that is going on in the particular index or the underlying strength. And I've done this for the top 4 indices. Usually I consider that anything above this dotted line, which denotes 55, is supposed to be a good strength in the market. Right now, if you look at the daily component, everything is languishing in the late 30s. This shows the immediate or the short-term trend strength. And if you look at the blue line, which is the weekly RSI, they are all in the borderline case right now, around 50, which means that all is not yet lost. This is a market that can recover pretty fast. That is what we were discussing on the indices front. This is on the overall markets. Look at the overall market breadth. We have just about 22% stocks above the 4-week moving average. This is a very, 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 very weak reading, and that is why there is nothing much happening. Even above the 10-week moving average, there is only 30% stocks. Unless these go up, believe me, there is no participation in the market and nothing much is going to go up. You may see a few stocks randomly going up here and there, but the entire market as a whole may not progress. And by the way, this has been happening for some time now. If we look at how the breadth has moved for the overall market since end of August to end of September, that is in the month of September, look at this infographic. Blue denotes end of August, green denotes end of September. So on the shorter term, we've seen it coming down, that is worsening. But in the intermediate and longer term, it has gone up slightly. So I would still not write off this market. As I've always pointed out, tactically speaking, we were expecting a sudden flush down, which has happened, and the other indicators show that we could actually recover very soon. A very important part of all of this is what percentage of stocks are above both the 4-week and the 10-week moving average, which is still around 24% right now, and this really needs to increase. Look at how returns were distributed on all stocks across the market for the month of September. I've given intervals here and I've given the percentage of stocks. Of course, while they usually form a bell curve, you see that it is more weighted towards the negative side. We had a huge chunk of stocks going down between 0 to 5% and 5 to 10%. And of course, on this side, we still have a few stocks, a good number of stocks which have actually gone up between 0 to 5%. But of course, the market has been negatively weighted, and we can see that from this infographic, which is leaning towards the left side. One of the other things that I track very keenly are net new highs. A strong market, a strong bull market is characterized by how good the net new high numbers are. Net new high numbers typically mean the new high numbers minus the new low numbers taken for a day and for a week. Now, if we see most of September, somewhere from here, we were actually putting in good positive numbers. And then the last week, everything started going down. And we are all negative right now. This is a very important aspect because it shows that the market is making more lows than it is making highs. And how can a bull market be there if there are more lows than highs? So I would definitely want to see this particular metric improving if the market were to start going up. Then there's something called what I call as the velocity index. Some people call it the advanced decline index. But I have, like many other things, I've given it my own twist. I don't track all the advances and declines in the market. For me, the velocity is important. Velocity, you would know, is it not only determines speed, but also the direction of that speed, right? So what I do is a finessed version where I track how many advances and declines of 4% in a day and how many of 15% in over 5 days or a week, basically. Now, if we see, the point is, it's not the values that are more important because these are rolling values over 3 months. It just shows the trend of the market and how it is going. If we see the last 1 week, these values started tapering down, especially the 4% in 1 day values. And that is where tactically we saw a sudden downside coming in. This particular metric is still holding on, but seems to have plateaued out. So we have to see how this changes. For the market to become good, I would want to see this particular number, 4% up in 1 day, start going up, moving up much more from here onwards. Now see how stocks have been behaving vis-a-vis their moving averages. This area graph, this area graph shows how stocks are with relation to their moving averages. So green indicates, which is the best ones, all the stocks that are above both the 4-week and the 10-week moving averages. Red, which is the worst one, indicates all the stocks or the percentage of stocks which are below both their 4-week and 10-week moving average. Right now, we've seen the red ones expand much more and the green one at the cost of the green one has really come down. Again, if we see from about middle of the month onwards, and that is when the red part started expanding. The other two, that is less than 4-week but more than 10-week, or more than 10-week but more than 4-week but less than 10-week, these just show mixed signals and they are very minuscule right now. See how the market health stands. Stocks away from their 52-week highs. You would remember this metric. I keep sharing this. This is one of the main metrics that I track. Of course, I've presented all the other main ones here itself. Now see, the proximity of stocks to their 52-week high price is very, very important, because when more number of stocks make newer 52-week highs, that shows that the market is really, really strong. You've seen indices have also not yet come back to their 52-week high, which happened in last September. We are yet to scale that peak. And if we see this data over the last about 3 months, end of June, end of July, end of August, and end of September. So what we see is there's hardly any movement. Within the top 10% of 52-week highs, we still have numbers which are only about 13% of stocks. While these two, that is 30 to 40% of 52-week highs or greater than 40% of 52-week highs, they are just about half of the entire stock universe. So this is something that needs to be tracked. What I would want to see going forward is the values in green and dark blue, dark green and dark blue to increase, because that will show that the markets are changing and going up. This is an activity quilt for different sectors. While I'll deep dive further, but this just shows where the activity really is, and I have sorted it for the convenience of the reader to understand how we are standing right now. What we have to basically look out for are more blues, because that indicates good activity. More reds indicate bad activity. We don't want to look at that. And whites or light colors are really no activity or somewhere in the middle. And if you really see, the top 4 are the ones where all the activity is focused in the market right now. That also shows how the markets have gone very narrow. Let's look at this in detail. Here I'm taking 5 parameters. Now this is 18 parameters, 18, which I track regularly. Out of those, I've just taken 5 and I've ranked different sectors and different industries based on them. These are all sorted as per monthly returns. Now, industries are within sectors. So for example, while sector shows banks, the industry will show banks public sector or banks private sector. Banks private sector is not being mentioned in this because this has only about the top 20 odd industries. So the metrics that I'm looking at are monthly returns. What is the relative performance of that particular sector or industry vis-a-vis Nifty 500? I want to see if it has really outperformed Nifty 500 and by what margin. What percentage of stocks in that sector are above the 4-week MA moving average? What percentage of stocks are above the 10-week moving average? And what percentage of stocks are within 15% of their 52-week high? Now there are 2 things that I can look at in this. I can look at who were the leading sectors for the last month, that is month of September, sector or industry. But it also helps me to identify which could be the next leaders. For example, aerospace and defense is the main one which has really led the entire thing. But if we look at some pockets, for example, what percentage of stocks are above 4-week MA, 10-week MA, or within their 52-week highs, we can see that there's a lot of value, hidden value, not yet utilized value amongst banks. So even within banks, if you were to bring it down, it's a public sector banks that have really been doing very, very well. This on the right side, the industry part, it just shows me which industries within these sectors have been doing very well. The idea behind looking at these is that in a bad market scenario, if there are some pockets of outperformance, one needs to keep a track of them, because that could be an area where future leaders of the next leg of the bull market can come in. That is why what you see is banks in terms of public sector, refineries in oil and gas, these are the ones which have been really, really coming up. Mining, minerals or metals is also another one which has been going up very well. These correspond to the sector on the left side. Of course, having said this, the market is extremely narrow right now. There is not enough participation, and that needs to increase going forward. So this is a very interesting slide that I wanted to share. Not too many people are aware of what factors are, but this is something that I track very keenly. And so what are factors basically? This just shows the factor performance for the calendar year 2025, which has been rebased to 100 and as on 1st of January 2025. So assuming that if 100 rupees were invested on 1st Jan in each factor, what would they be valued at by end of September? So what are these factors? Factors are basically different investing styles. Value investing, low volatility investing. Market, of course, stands for the benchmark, which is NSE 500. Quality stocks, buying into quality stocks, buying into alpha, and momentum investing. If you see momentum and alpha, both have really taken a beating, especially momentum in this particular calendar year. Right now, it looks like value investing is slightly coming up. Of course, this keeps changing, but it also helps to understand which are the stocks that are really going up. So this means that value buys, stocks which were value buys, they have been bought into in a big way, which also means that these are the stocks that that really came down in price and from the bottom started getting picked up. That is why we are not also seeing too many stocks at their 52-week highs, because the buying is really happening. There's value buying happening in the market, and buying is happening from the bottoms right now. Of course, this is something that one needs to just keep in mind in terms of what is going on. And I think it's just a great data point to track as well. FI positioning. I think any commentary on the market is incomplete if we don't talk about how FIIs are positioned today, because they seem to know the pulse of the market and they actually act. They probably move it also, but anyway, not commenting on that. The blue line shows how Nifty has been behaving, and the green line down shows what is the FII's net index position. Now see, there are different types of entities that are there in the market. There are FIIs, there are DIIs, there are retailers, something called clients. So, not getting into that. FIIs, because they really bring in a gush of money, and everyone knows about Jane Street. So, it's important to track what they've been doing in the market. Currently, they are still sitting on record shorts in the market, and this has happened for the longest time. Now, these levels are way below the levels from where markets have reversed. Look at this, for example. How markets reversed when this touched, this would have been about 3.5 to 4 lakh odd numbers, and markets immediately reversed from there. Now, these shorts have been carried on since August, and there's no respite from there. They've just been in a range. They reduce it and then increase it, and then they reduce it and increase it. Again, they reduced it, and sometime from the middle of September, they increased it. That is more shorts, and they came down to record levels. So what does this indicate? Number one, till now, there has been no short covering. But it also shows that if there is a short covering from these record levels, then the market can really zoom up from there, from here onwards. So this is something that we need to keep a track of. Now, this is the FI's cash activity. Everyone knows that DIs are buying, fueled by all the SIPs that are coming in, a robust SIP book that is making them net buyers in the market. FIs have been selling in the cash market. Now, FIs have various ways of operating in the market: derivatives markets, cash markets, debt, equity, etc., etc. I'm just looking at how they've been behaving in the cash markets. And what you would see is that from somewhere around October 2024, there's been incessant selling continuously, except for a small window somewhere around April mid to May mid. Otherwise, there has been continuous selling. And especially if you look at the markets from July onwards sometime till today, that is till end of September, there has only been selling in the cash market. This is another aspect that has been bringing down the markets or keeping them down and not letting them go up. Of course, a host of factors play a role here, but we're just tracking numbers and seeing what is happening. So that's how the market looks like right now. Just wanted to give a kind of a commentary on the state of the markets and what could it entail. I've already spoken about how short covering could really take the markets from here onwards. I think that after a little bit of a downside, we should be seeing good months also indicated by the seasonality of October, November and December, these three being the best months of the year for investors. So that's about it. I hope this was useful for you. If this turns out to be useful, I may even make this a regular feature, and I'll of course post all these links on my channel. So thank you for your time, and see you soon.